Well, I think we've seen a real sea change in the use of insurance within M&A transactions since the financial crisis. Up until that point, there was, I think, a reluctance to get yet another third party involved in the transaction process when you're trying to do a deal as efficiently as possible. But I think what occurred at that time was that people slowed down a little bit, started taking a bit more attention to their diligence and having a higher risk aversion, if you like. And that really played into the usage of transaction risk solutions, and particularly warranty and indemnity insurance, as people wanted a greater level of security for their transactions. So it's increased in usage over the last 5 years quite dramatically, and we've seen in certain territories a very high uptake. So, for example, in Australasia, we're seeing some form of transaction risk insurance almost being used on every deal in that particular region, as opposed to perhaps some of the European jurisdictions like Germany, where it was virtually never used at all. Interestingly, we're starting to see some of those territories where usage was very low are starting to see the benefits, and perhaps because of other cross-border transactions that they've worked on, they've seen the use of the insurance and starting to pick it up more on a domestic basis as well. So although I think the Cameron's presentation referred to insurance in Europe perhaps being looked at on approximately 9% of transactions, I think there's quite a huge variation between different territories in terms of how often it is being considered. So I think that the most developed areas in terms of usage is certainly the UK, but probably closely followed by Scandinavia. Has been a region which has taken the use of insurance into the kind of heart of the deal toolkit. Less so perhaps in the Benelux regions, the German language speaking regions, but that is now starting to pick up, so we're seeing an increase of the number of deals coming through. Yes, I think it's being, initially when the product first developed, it was very much seen as something that you would go to if you were really at the stage of a deal breaker. And so it was kind of a last chance saloon type product in the early stages. But now, because it's being used in a much more strategic way, people are looking, or I should say deal teams are starting to look at insurance solutions much earlier in the process, which has a benefit both for the deal itself and for the insurers in terms of being able to gain a greater level of comfort across different types of risks and perhaps transactions that are structured in more unusual ways.